Well, traders, it's been another crazy 24-hour start to the week here. Another gap down for another Monday. This is the same kind of stuff that happened a week ago. You can actually see here's last Monday where we had the DeepSeek stuff that really scared the market for a little bit of time. Then we saw the grind recovery kind of filled that gap. And then just in time when things looked to be clearing up, we saw another gap lower. In this video, I'm going to cover what's going on with indices, crypto, all the financial market stuff that's happening right now, as I do in every single one of my videos. And if you enjoy my commentary, we'll keep these videos completely free as long as possible, as long as you can help me out with something. Hit the thumbs up button on the video. Let's get started. So let me give you the really oversimplified events that took place causing this market to really gap lower and get scared over the weekend. Now, we saw some of this on Friday, which followed through into Monday trading. Essentially, the word, we got two T's here, right? Trump's tariffs. That's what is really getting the attention of the markets right now. Specifically, tariffs were imposed on Canada, Mexico, and on China. And we can break those down independently here on a very oversimplified, rapid basis. First, let's talk about Canada. What happened with Canada? Well, the US put 25% tariffs on Canada, and immediately in response over the weekend, Canada retaliated with a equal tariff on the US. And of course, what that does is it makes some of the trade between the two countries a little bit more complicated, right? There's import costs to both countries from the other, and so that creates a little bit of tension. And what the market does not like to see is trade and kind of smoothness of business get complicated, right? A lot of profit margins for a lot of businesses can come under scrutiny. That can lead to layoffs, etc., due to these tariffs. Now, I'm not going to sit here and say that all tariffs are bad, and I've been clearly on the channel saying over and over, essentially tariffs are a tool. They can be used in a good way or a bad way, just like a shovel could be used really well if you're digging in the dirt, but it wouldn't do you very much good if you're trying to chop down a tree. So Canada, again, US, there's a little bit of tension there. Then we have Mexico. The US sort of imposed some strong sanctions from President Trump. And actually, part of the reason the market popped here this morning is there was apparently a successful phone call, or at least a promising phone call, where Trump and the president of Mexico kind of agreed to negotiate over the course of next month. Let's push back some of the retaliatory tariffs from Mexico, and the market celebrated this. Finally, China. Now, China, we have a long history of doing a ton of business with and also doing a lot of trade war with. In 2018, that was a big kind of problem between the US and China. There was a ton of trade war stuff. And as we speak here today, that is contributing once again to why the markets are lower here today. Now, I want to pause and just mention that this year is going to be headline heavy. There's going to be a lot of drama, as you know, with Trump, whether you like him or dislike him. The guy has a lot of strong opinions, and those strong opinions can make markets move all sorts of ways. I also want to reiterate that this year is a year where we started out saying and continue to say this is more of a year focused on fiscal policy rather than monetary policy. Instead of focusing on the Fed's every move, we find ourselves here staring more at what's happening with tariffs and what Trump is doing and saying and all that stuff. It bears some resemblance to actually 2019, the last time we saw Trump, the president, and some interesting times played out there as well. Within all of this, there are some great opportunities, and I will be looking for them, but most importantly, I'll be sticking to the system that I use day in, day out to actually find trading setups. Headlines and all this stuff is fun to cover on YouTube, but for me personally, where the rubber meets the road, or where I actually make my trading decisions, it comes from the top setups page within the Edge Finder, as it has done for years now. I stick to my system, I look at this list, and I say, can I find some technical entries that marry up nicely with the economic data that's actually showing up, right? So tariffs and news and headlines, they all can make a lot of noise, but what I'm most interested in is the actual economic data, how it falls, and what kind of trends can we observe in this market? So right now, despite the headlines being a little scary, I am still looking to buy dips on indices, the S&P, the Dow Jones, the NASDAQ, the DAX, the Russell. Look at this. We've got a pretty strong overall tilt towards indices. Now, this could change over time, but right now, that's what my system tells me. I also am seeing some pretty interesting stuff on yen crosses, shorting some yen crosses, and also some dollar crosses, NZD US dollar and Aussie dollar as well. The Edge Finder is currently 30% off. There's a link and promo code in the description down below. If you're a regular viewer of my channel and you like my stuff, I would encourage you to check out the Edge Finder, take your trading to the next level, and start trading with the data. The system that I use day in, day out can be yours as well, and all of the economic data and sentiment tools that it allows you to browse at the click of a few buttons are a fabulous tool for those looking to take their trading to the next level. So for example, we could take a look at the commitment of traders data and see what institutional money flow is looking like on a week-over-week basis. We could also look at the put-to-call ratio, which is one of my favorite indicators to look at market sentiment. Are people feeling overly bullish or overly bearish? We can track that. And by the way, we just added things like gold, NASDAQ, silver, and US oil to the put-to-call ratio, so you can check sentiment on those tools as well. You can also track seasonality, which is a very powerful indicator as well. This can show you certain periods of the year where your favorite charts may be more oriented towards being bullish or bearish based on historical studies. For example, you can see we've selected gold, which this has been an incredibly powerful signal. January is apparently, for the last 10 years, the best month of the year for gold. And lo and behold, we've got a wonderful move higher on the price of gold as we speak. So you can see here is a look at gold. If we pull that up, huge move to the upside. And again, seasonality kind of suggested that that could be the theme for January. So don't miss your chance. Take advantage of the Edge Finder 30% off discount. All the information is down below in the description. And if you'd like to chat with a support team member, you can do so with the first link in the description down below. It's also been a crazy day for the US dollar. You can see a huge move higher and then the reversal. And I had a USD CHF trade that I actually took profits on towards the top half of this move, which was awesome, but just wanted to lock in some gains on that. I am still bullish on the dollar, but looking for pullbacks on it. For my Forex trading, I do a little bit more of a mean reversion style trading where I'm looking to scale in and scale out of trades, and decided to take profits towards the top of this move. And I've had a lot of success trading dollar Swiss here recently. You can see a lot of my order executions. I've just basically been buying the reversals or pullbacks into key areas and then closing when we get up to a bit of an overbought level. By the way, you can join our Discord down below if that is something you're interested in and seeing the trade signals that I'm sharing. A couple other interesting charts to mention here today are the Euro US dollar. So if we take a look at this, the Euro dollar actually gapped lower here and then sort of has been retracing into this area. I would actually be very careful at these levels because as we start to fill this gap, I do think that there's a bit of a kind of fill that gap and then possibly some opportunities for sellers to take advantage and clear those lows. So I lean bearish on the Euro dollar as well as other charts like the Australian dollar. In fact, this chart looks really interesting for a possible breakout through those lows and continuation play. In fact, the Australian dollar could be our chart of the day. We're getting a -6 score here. And if we take a look at the technical chart, I really like what we're seeing here. You can see an overall very strong downtrend here on the moving averages. And if we just kind of take a look at our price action for a second, we tested a very key level of support. Now, what I mean by this is that if we take our support zone here, you can see we did get a very strong reaction to this area. But for me, a trade setup that looks really good, I've got two ideas here for the Australian dollar against the US dollar. We may fill that gap and overshoot a little bit and retest this area of resistance. That 63.25 level looks really interesting for a possible sell the rally continuation of this longer term downward trend that we're seeing. The secondary scenario that I kind of like for a possible short setup would be a momentum heavy break through those lows, pull back into that consolidation, and then looking for continuation. I do like the short side for the Australian dollar. I think the path of least resistance on this is more downside. What I especially like about the Australian dollar idea is that we are getting confirmation from the Edge Finder. You guys know when I take trades, I'm looking for the confirmation here on this top setups page. And so a -6 score is a bearish score overall. We are seeing retail positioning helping us out with the short side here. Basically, what this is saying is that retail traders are very long the Australian dollar, so we're getting a contrarian bearish signal. And then we're also seeing some seasonality and the overall trend here to the downside. We're getting PMIs that heavily favor the US and inflation data that favors the US, or for the US dollar. So really strong overall read. I like this setup and I do like both scenarios, either the pullback or breakout retest opportunity on the Australian dollar. And if I take that trade, I'll share it inside of our Discord. Here's a look at the VIX basically spiking higher initially off of the tariff news. Markets kind of relaxing a little bit here, only up 8.6% at the time of recording. But again, things are very volatile, so this could close higher here today, or it could completely come back down to where we were last week. We'll just have to see. But right now, I continue to kind of be in the buy the dip mentality. So if we do see larger pullbacks in the S&P 500, the NASDAQ, etc., I'll probably be taking advantage of those as possible dip opportunities. Specifically on the NASDAQ, I really like this area of support. I didn't catch this area. I wish I had, obviously with hindsight, but if we do come down and test this area once more, I really like the NAS long idea. So I'm going to be looking for that, even though we are kind of in a consolidation phase and haven't really been going very far. A pullback is definitely something I'd welcome and be looking for some opportunities to get some bigger sizing on the NAS longs. Again, NASDAQ is a bullish confirmation on the Edge Finder, so I'll continue to watch that close. Today's video is sponsored by 8cap. This is a great brokerage for traders outside of the United States to trade all of their favorite charts, including indices, commodities, cryptocurrencies, Forex, and much more. And they have a special offer available to my subscribers. Obviously, you guys know I use the Edge Finder to scan market data and look for trading setups, but 8cap has actually been able to make it so that you can get a free copy of the Edge Finder if you make a certain deposit into their brokerage. So they are a well-regulated brokerage. If that's something that you're interested in learning more about, use the first link in the description down below to chat directly to our support team, and they can give you some more information about how you can get a free Edge Finder with a deposit of, I think it's 7,500 or something of that range or more in US dollars. If you do that, you can actually get a free copy of the Edge Finder. And please note, this is available only to people outside of the United States. Unfortunately, 8cap does not accept US clients. There are times where the dollar index and gold move up on the same time, at the same time. And I think that when that happens, that is usually a good signal that there is some true risk off sentiment in the markets. When people rush to bonds, when they rush to yen, when they rush to gold, and they sell everything else, that is evident of a more risk off move. So that's what I think you're seeing here today, a true risk off move. You got VIX up 21%. This is your classic by the books even risk off day. Bonds up, yen up, gold up, dollar up, everything else kind of getting hurt. So just wanted to point that out to everybody who's out there who's wondering, you know, let me say this. If you're somebody who's saying, what the heck is happening to Bitcoin or to NASDAQ? Well, we've been living in a risk on environment, which those things are the easy trade. In a risk on environment, NASDAQ higher, stocks in general higher, cryptocurrency higher. If you are taken aback and surprised by today, then what you have experienced is a classic flip between a risk on environment and a risk off, where everything sort of reverses roles, and we see some of the stuff that's gotten beat up at the expense of a risk on environment take its turn. So Ivan, I think we might have seen a little bit of a flip more into a risk off environment, and we haven't seen one in a while. So a lot of new traders are not used to that switch back into a risk off environment. What would you say to people who are maybe shocked by the recent market moves? How would you caution them in trading a risk-off environment?
I would say, before your last sentence, take notes. This is pure risk-off. What, maybe not dollar yen, but what dollar did, what the Australian dollar did, or for that matter, go to the indices of those currencies. Australian dollar fell, but has a pullback. Okay, what does that tell you? The Brits had a fall, but is now having a deeper pullback. Now you can see the individual strength, and because the first fell, and then who is performing better and who's performing worse. That is kind of depending on who's hurt more or who is going to be affected more. But you can see Euro here hasn't had the same pullback as the pound has, and pound is now only today down 0.5%, but Euro is down 1.24%. So take notes, learn, because this is going to happen again. Risk event happens almost every year. It happens every year. It's named differently. If it's Ukraine war, is it Israel war, or is it an oil gas line? Is it a tsunami? What is it? It doesn't really matter. Market behaves the same way. Who falls and who is doing worst and who's doing best is always going to be the same. Dollar best, everything else falls. And Aussie, generally speaking, Aussie and New Zealand is having the worst day. And actually, New Zealand is actually having, percentage-wise, the worst day.
Yeah. And, I also want to just clarify too that when we talk about a risk on versus risk off environment, one day does not truly, someone in the audience asked, can you clarify what risk on versus risk off is? And the simple way to think about this is basically when things are good, when people feel comfortable with markets, where they're not terrified about what's happening and so or whatever, they typically take more risk. So people have a focus on either putting more risk on and taking risk in order to grow, investments, or people shift more into protection and defense. Basically, risk on is offense, risk off is defense. When people go into defense mode, they're not worried about making maximum money. They're worried about protecting the money they have. And those two environments are very different. And knowing how to trade in each one is really key. Now, does today signal that we are certainly going into a risk-off environment? The answer is no. I personally, and this is the way I look at it, I look at something like the US economic heat map on the Edge Finder, and I say, show me the colors, and when this tilts more red, then we have signified that we are actually in a risk-off environment. This is kind of my confirmation indicator. I want to see these things really materially change, because look, manufacturing PMIs came in better than expected today, and they remain blue. So that's still a risk on indicator. So we can look at this as a net and say, where is unemployment? Where are PMI numbers? Where's GDP growth? If this all starts to print red, then I would truly commit more to the risk off side. But I'm going to stay hesitant, and I'm going to wait for quote unquote confirmation from the US economic heat map page before I jump to the conclusion that it's just sell everything, terrified, risk off environment. I think that days like this are going to happen where the market can fake you out. It can suddenly look all risk off, and then the next day it looks risk on, and then the next day it looks risk off. To me, to filter the data a little bit is most important. So I just look at the heat map and stay focused on the big picture. What's the summary of the data looking like? Because look, we can all have our opinions about tariffs are going to do this, and Trump said this to this person, and Powell responded this. You can do that game all day long, but that's a really difficult game to truly predict the future. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.